November 2025. I'm Gianni going to be with you until the bottom of the hour. And looks like stocks are going to be going out near the lows of the week. It has been, when's the last time we saw stocks go out near the lows of the week? It's been a long time. Well, actually, I take that back. It's we had an instance um back in October, about a month ago, we went out near the lows of the week. That was the bottom. Before that, it was the end of July that stocks went out near the lows of the week. So basically, over the last 4 or 5 months, we've only had 3 instances where stocks closed at the lows of the week. So pretty remarkable when you think about it like that. Um, Definitely some rotation into defensive names this week. Defensive areas of the market, technology getting smacked, getting hit pretty hard. A lot of semiconductors threatening stops. So we'll take a look at that because today is garbage day. We're going to be going through the names that we cover in this room to determine whether we're going to hold them, fold them, walk away, or run. But I have a lot of material to cover with you today. So get comfortable. It's almost lunchtime. If you want to, grab a sandwich and tune into the session, I don't blame you because we're going to be covering a lot of ground. You're going to have to be focused. So don't let your belly growls distract you. So we have to be 100% dialed in. Now, we got a little bit of volatility. Remember, this is the price we pay to invest. And, when we had the quarterly forecast for the Trinity trade a couple of months ago, we were flying high, flying high. We had, fresh off of some tremendous gains. And I looked straight at the Trinity members and I said, hey, a downturn will come. A downturn will come again. And so, yes, we're flying high. And I want to remind you, I want to try and ground you in this environment that you need to be prepared for the next pullback in this market. And, there have been more stocks stopping out as of late. I'd say the most amount of stocks stopping out really since like March, right? That was the last time that we had so many, so many stocks stopping out. But, we did have some stocks hitting targets as recently as a week ago. So it's not all doom and gloom out there. There's a massive rotation taking place. Tech needs a breather. I think semiconductors could use some rest. And that's okay. But what this is doing is setting us up for the next rally. You have to have these resets. You have to have these rug pulls. You look at the equity curve in your account. Yeah, I'm sure if you've been predominantly long like myself, it's not been going higher over the last month. But after 6 months of it being straight to the upside, it's only normal that you're going to have a period of time where things are not firing on all cylinders. I've been here before. We've been here before. Okay. So what we do is we just wait. We wait for the setups to trigger. There was even a stock I was looking at yesterday. Looked like it was about to break out. I shared a trade idea. It did not trigger. Today it was down 6%. Again, we're not just like throwing paint on the wall here and expecting a masterpiece to be designed. There's not a lot of new setups triggering. We're just kind of waiting here. So that all being said, there's some real angst creeping into the market right now. Government's still shut down. It seems like it could be coming to an end. Apparently, there's some air traffic that's going to be getting shut down in various parts of the country. Like this is going to start taking a serious toll on the economy. And so it's really messed up to think that our supposed leaders are just playing, Russian roulette with people's livelihoods. So it's really disappointing to see that happening. I've said before, I don't think there's really a mathematical way out of this debt debacle that we have. And what I would like to see is, hey, let's have like state-of-the-art infrastructure. All this stuff, they're all numbers, they're all figures. The government's broke, the government's bankrupt. Let's at least have some like new roads. Let's at least have like state-of-the-art airports, good infrastructure, update the grid. Let's have that before the world stops lending to us. Let's have that before the gravy train stops. That's just my take. That's the pragmatist in me. Because I just think that you just need like a debt jubilee, a major reset at this point because there is no way out. There is no way out. So I think it's just a matter of accepting what it's going to be. And so this is all just theatrics, right? This is all theatrics. But once the government reopens, because it will reopen, we will see more liquidity come back into the market. You had one of the Fed chairs today. Was it Daly or someone else? But they were saying, yeah, the Fed's going to start buying securities again and adding to their balance sheet. So basically, the Fed's going to be adding liquidity significantly, adding liquidity to the market here shortly. Quantitative tightening is coming to an end. So, I think this is just a repricing of the market. And yeah, we've had a run up, and so 1 week down is okay. It's okay. We are in earnings season, and earnings have by and large delivered. We've seen some good results. So this is helping justify this rally higher. Of course it's Friday. We're going to be talking about the sector stack, seeing a lot of sectors in the red this week, and only 7 out of the 11. I actually wonder if it's any less now. Yeah, just barely 7 out of the 11 sectors in the S&P 500 are in positive territory since the start of the third quarter. Okay, so you have four in the red, 3 in the green. That's pretty notable. Pretty notable. So we're going to be looking at that. But just remember, guys, in this business, smarts alone won't just do it for you. You need to be a wise guy. You need to be cunning. The market giveth, the market taketh away. But when the market is taking away, you got to hold on to as much as you can, because eventually the market gets tired and it goes back in the opposite direction. So, we've been in a giving phase. Now I think we're in a taking phase. I'm not bearish. I'm not, beating the drums that, hey, we're going back to new all-time highs next week. I think that we are flushing out. We're resetting here. I think that we will finish the year near the highs. I don't see this decline lasting really beyond next week. We might even be bottoming today. But, if you recall, I was looking for a drift. I mentioned the possibility of a drift lower into the $6,700 area. We have dropped below that on the S&P. We've dropped below that on the S&P now. So, yes, now we see if bulls can step back in, where they're going to be buying. But I was Mr. Great Tech Reset. Now I don't think the biggest opportunity is in tech. I think it's in healthcare. I think it's in biotech. We're going to need to see some heavy lifting coming from those sectors to keep bulls excited about something. All right, everyone. So that's what I got for today on the agenda. Like I said, get comfortable, get ready. Let's see who's all in the chat here. Appreciate you guys tuning in. Okay, we have John, Stephanie, Laylo. Family is growing. Thank you, Laylo. Kids have had some sniffles this week, but seems like they're getting over that. My daughter, they just came back inside. I don't know where they were, but she was just screaming right by the basement door. They're endlessly entertaining. The garden's pretty much shut down at this point. The only thing I'm able to harvest right now, getting some of our early frost coming in now. So I'm able to harvest like some kale and broccoli. Everything else is done. I think I got my last tomato harvest this week. I got to move the fig trees indoors because we're going to get some snow and some real freezing temperatures this weekend. Bit of a cold front coming in here in Michigan, but this is normal fall weather. So yeah, I'm getting ready for hunting season now. That's what I'm most excited about. Jackie J, Two Carter, Eugene, Mari, Bleak, yes, great time for deer hunting. I don't think I'm going to get any deer hunting in this year, unfortunately, but I do have a trip to Texas booked for February where I'll be looking to do some hog hunting. Never done that before, but I'm looking forward to that very much. Florida Woody, Tim, SHP, P Butts, Layla's grabbing some Rolaids with a shot of Pepto. Very nice. Yes, Kevin, we are going to be looking at where the bright spots are in this market. Maybe it's just consumer staples. But that's been where a lot of the weakness has been. Now they are bouncing. Now tech is pulling back. So I think we're just going to be chopping around. Yeah, what happened shortly after those stop outs in March, April was a bloodbath. The first half of the month, the back half of the month was actually pretty darn good. Trader Tyler, you got to max those credit cards before you declare bankruptcy. I mean, is that what the bankruptcy attorneys tell you to do? I guess that it's actually like prudent strategy. So, yeah, I'm not sure. Fortunately, I've not been in that position. I like to pay back my debts. It's like I don't know if we have any. I'm sure we have some Game of Thrones um, fans in here. What a great show that was. I think they could have done a better ending. I never really got into the House of the Dragon, but apparently they're making another prequel now. House of the Dragon didn't really do it for me. But I'll definitely check out the prequel. But it's like the Lannister family. We always pay back our debts, right? Yeah, what a great show. Probably like the best show of the 2010s, which is interesting because that's around the time that Sopranos came to an end. I think it was like Sopranos ended like 2011, 2012. I mean that's a great show too. It's very extra entertaining for me because I mean in Michigan here you don't really have an Italian community like they have in the Sopranos, but I know some people like from Italy that were from they like, grew up in Jersey, and it's just a really good representation of the community over there. Like just the way they act. I'm not saying they're all mobsters, right? But I'm just saying like the like the subculture there. It's pretty funny. Um, Sheriff, air traffic system is still operating like 1975. That's what I mean. Let's upgrade this stuff before the gravy train stops. Frankie, Bon Venerdì, Chicago Dave, Steve G, Steve V, BNR News, Les, Roger, yes, all good. Calvin, Todd, Kishore, how we doing? MDM Con. Um, What's my alternative if we don't rally into year end? Yeah, I mean, I have a cyclical bottom coming in like at any time. I was looking for a cyclical bottom like in December. I don't think we've started that decline. If we are actually falling into a bigger cycle now, that actually sets us up for a rally into year end. I guess like the real worst case scenario is, are we getting, like a similar drop like we had in 2018? That was around the government shutdown too, right? The Christmas Eve bottom of 2018. If you remember that, that was the time that I realized, hey, I'm out of this advisory world that I was in at the time. Because I was given the instructions to sell the market bottom. Um, so that's the worst case scenario. I don't think that's gonna happen. Of course it could. Um, but yeah, sure. Bow hunting started October 1st. You have um, firearm season that opens on the 15th in about a week, next Saturday. Uh, is it hog hunting where you fly in a helicopter and use a machine gun? No, I'm not Ted Nugent. No, no, it's going to be at my wife's grandfather's place in Texas. Yes, Game of Thrones was the best. It was awesome. Always pay their debts. All right, guys, let's get into the charts today. Yeah, portfolio's pretty much right across the board. I got like two names that are up on the day. I'm actually impressed with some of the strength you're seeing coming from the crypto sector. And recall that the crypto, led the weakness. So we'll see if the bulls can make something happen here. I did have a setup for a bottom in crypto coming into this week. Actually, I was looking at it in previous weeks, but the model was still holding, pointing to a bottom. Seeing some weakness in Tesla, which is weighing on me quite a bit. But let's start off with currencies as we normally do. You hit a new high here in the dollar yen earlier this week. We've been pulling back since. I'm looking for a kind of a drop into next week, maybe the week after. And I told you, I think the strategy is to own dollars, especially against the yen going into 2026. So this could be the great trade of 2026 in the currency market. You take a look at the euro, nice rebound. We were looking for this bounce here in currencies against the dollar. That is shaping up accordingly. But it's pretty interesting because even though I'm bullish on the dollar against the yen and the euro, I'm actually bearish on the dollar against the Swiss franc. I think the Swiss franc's going to continue to rally. I think the dollar is going to continue dropping into 2026 against the Swiss franc. So again, we always have to look at currencies, like in terms of pairs. It's not just like, oh, every currency is going to fall against the dollar. That's not how it works. So I like what I'm seeing in the Swiss franc against the dollar, the euro. I think this is kind of the one of the last bounces. You probably get to 117, 118. I'm not really looking for much else beyond there. But the real um, thing that I'm watching here for the dollar is the strength emerging against the yen. So I think the carry trade's coming back. I think it's going to be bullish. You can see how the euro is still strong against the yen. So the yen's actually, the dollar's the loser, but I think the yen's going to be the even bigger loser in time. So that's what's happening in currencies. Not much of a change on that front. You take a look at bonds. We're back near the highs of the day. We're looking for that lows in bonds. We're well off the lows of the week, not far off the highs of the week. Is this some flight to safety playing out in the U.S.? It could be. You do have some leadership from the 10-year note. That looks like a higher low. That's checking out. That's what I wanted to see. The 2-year notes also rallying pretty nicely. Again, I'm still in the lower interest rate camp. I do think that the Fed's going to keep cutting rates into next year. They might pause in December. I don't think that they will, but it's a possibility. I think we're like a 60-40 probability around that of a cut. I haven't checked it in a couple of days. But this does look like a higher low in bonds. This is bullish. The trend is staying up, and this fits with the weakness in crude oil. You were up earlier today. You're now back down near the lows of the day. A little bit of a bounce here in the 15-minute, but you take a look at the weekly chart here, and it's another low weekly close. So I think we have another lower high here. And here's the thing, guys. Like, let's just talk like what a bearish case might look like if we do see a big drop in stocks, which again is not my preferred scenario. Maybe you do see a big drop in crude oil occur at the same time. Again, that's not what I'm expecting. I would prefer to see crude oil drift lower into Q1, into Q2, form a bigger bottom around then, and then the inflationary wave starts to rise once again. And I think bonds are kind of pointing into a similar direction because remember, most of the time, 9 times out of 10, you're going to be seeing crude oil and bonds move in opposite directions. Okay. Crude oil is the primary driver of inflation. It's not tariffs, it's not taxes, it's not the Fed, it's crude oil. It's crude oil. Why? Because crude oil is used in everything. You want to take the crops to the store. You want to harvest those crops. You want to make clothes. You want to make medicine. You want to do pretty much anything. It involves crude oil. Okay. And so nothing has a greater impact on inflation expectations than crude oil. When crude oil prices go up, inflation expectations go up. When inflation expectations go up, interest rates go up. When interest rates go up, bond prices go down. The opposite is also true. When crude oil prices go down, inflation expectations go down. When inflation expectations go down, interest rates go down. When interest rates go down, bond prices go up. Okay? So again, I'm still in the bearish camp for crude oil. Energy not having a bad week here, but you're off the highs there. I'm not just not seeing that many opportunities on that front at the moment. And again, at some point you're gonna see me become the biggest energy bull there is. But I've taken the foot off the gas when it comes to tech, and really the only thing I've been pushing the issue on, or like going like foot on the gas, is like healthcare and biotech names. I still like what's happening in China, and we'll take a look at that in a moment. But let me actually, oops, I didn't mean to have let me delete that. I didn't mean to put that in the chat. I meant to put that in Thinkorswim. Let's go ahead and actually jump over to some of what I have on the slides. The job market is weakening, and this is a big problem. So, you have a big uptick here. Layoffs for any October, the highest since 2003. I mean, this is remarkable. This is terrible. This is really bad news. Warehousing and technology sectors led last month's surge. Is this AI coming for the white collar jobs? Is this the robots coming for the warehouse jobs? This is not looking good. This is not looking good. Now, what happened in 2003? Well, you were coming out of that dot-com bubble low still. You were about a year away. And the Fed was lowering rates still. You saw the bubble inflate in housing and stocks, for another couple of years. The stock market didn't peak until, I believe it was October 2007. So you had 4 more years. I'm not saying that, hey, just because we're looking at this data, this market's got 4 more years to rally. I don't think that's actually the case. But what 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 is the job market looking for at this point from the Fed, from the government? They're looking for stimulus. Stimulus. Now the problem is that stimulus increases the odds of inflation, right? So you can't have it all. You can't have it all. This is a big, big problem. So the job market's slowing down. This isn't the job market of, 2 or 3 years ago where anyone that wanted to work could work. People are struggling. I've had friends. I had a good friend of mine that worked, in tech, kind of like on the analytics side, and got laid off. Couldn't find a job for several months, and he started a painting business. He's a very like talented, hands-on guy in that regard too. But was working in the tech space for a while and just was like, you know what? I'm not just going to sit here and keep waiting for, I keep applying to jobs. I'm not getting interviews. I'm not getting selected. All right, I'm going to start painting. So he has. And so that's where, the labor is at right now. Um, and I think there's some real opportunities in there for people that want to work hard to make some good money. So, what's coming next? Well, I know Garrett's been talking about this a lot too, but the Treasury general account, the government's been shut down, so they've not been adding to this, but there's a coming liquidity pump, guys, between the Treasury general account starting to rise, between the Fed ending QT, between the Fed set to add back to their balance sheet, between lower interest rates. There is more liquidity coming into the market. Okay. There is more liquidity coming into the market. So, be aware of that. Be aware of that. So yeah, you're getting this pullback right now. This just looks to be a big reset, and that's what markets do, especially after big runs to the upside. So let's go ahead and jump back over to Thinkorswim here. Look at what's going on at the index level as well as some other big stocks. Are we making new lows of the day? Yeah, we're hitting new lows. This is just straight selling, but it's pretty orderly, right? It's pretty orderly. Do we come back and test this low here? We might be testing that gap. So yeah, if you thought the fear was high already, it's going to get even higher. And really, what you would be doing on the weekly is just retesting this 20-week moving average there. Monthly, it's too early to really look at, but you can see we've pretty much given back all of our gains already in a week that we've had since October. Okay, so I'm still looking for a higher low, really, as long as we don't start breaking hard below this low from October 10th. There's really not a concern. There's not been a change in the trend. This is normal. This is the longest drop that we've had in stocks now, going back to what? Which is actually like comical to say. This is the longest drop that we've had now, because let's see, we're on day 6. We're on day 6 of this drop. I think this is the longest drop that we've had since the end of April. I don't see any other 6-day drops really. You had like a 4-day drop here in August. So isn't that crazy to think about? This is the longest decline that we've had since April. Because you see, I don't look at declines and rallies just from the standpoint of price. I look at them from the standpoint of time as well. Okay. So this is the longest drop that we've had in 7 months. And that's okay. And that's okay. So yeah, you got the VIX climbing up, going to be going out near the highs of the week. You have the NASDAQ leading the sell-off. You have semiconductors getting hit hard. This is a classical risk-off day. A classical risk-off day. We are down 4.5% in semiconductors. The Dow is down around 0.8% right now, but still in higher low territory. That's what's crazy. So yeah, the market wants to lull you to sleep. The market wants to discourage you. The market wants you to think that it's all over. Meanwhile, from a technical standpoint, nothing has changed. Nothing has changed. Let's see here. We had this drop in the Dow. 1, 2, 3, 4. 4 days. Yeah, this is the longest drop that we've had since the end of April, because you had that rally and then you had that secondary drop there. 1, 2, 3, 4, 5, 6. So here in the Dow, it's actually 7 days long, right? 1, 2, 3, 4, 5, 6, 7. Seventh day. Seventh day. So yeah, this is a very typical setup for a cyclical bottom of some form to occur, but you're going to see the most volatility coming up here soon. So now we'll see if we can take out this low from the 10th. I don't think we will. I think we'll hold support here, and then you get that cyclical reset, and that puts us up for a good rebound into year end. So let's go ahead and look at the sector stack, because there's some, actually, you know what? I'm gonna put my trading view on this, get you to, so you can see all the current numbers, because everything is moving so quickly right now. Okay, let me share this. Got the trading view. This is the updated sector stack for this week. So you have, is there a fourth one there? Yes, you have 4 sectors in the red now. You have 7 in the green. You have utilities in second place. Tech has really been coming back down hard. Consumer discretionary hanging out here in third. Healthcare has had a nice rebound. That's kind of been where I've been seeing the most opportunity. Energy is even getting a little bit of a rally here too. So yeah, this isn't the strongest signal right now, but it's not all. It's also not like, oh hey, we need to head for the hills, like everything's blowing up type of signal. Okay. So just, perspective of where we are. So again, yeah, this is not an environment to be pushing the issue on longs, but bigger picture combined with the liquidity, combined with the money flows, you look at earnings and valuations. Okay. The current phase of this market cycle is being powered by earnings growth. Valuation did the lifting in 2023 when you were coming out of that bear market in 2022. That's actually when earnings fell 2% that year. And then you had a nice earning advance in 2024. But it's been pretty good so far. It's been pretty good so far. So here's a nice graphic that shows like where we are. We're coming in above estimates. So far so good. And again, so with stocks coming down in price, earnings coming up, this is actually helping the valuations. Okay. So now what's been going on in this market? It's been a narrowing of the leadership. So let's actually back up to what happened in 2000 and 2002 when the tech bubble burst. It's crazy because, when that blew up, the indexes looked really nasty, but the average stock did all right. So here's what I mean is that back in 2000, 2002, you had what was called the Janus 20. Okay. And those 20 stocks dragged the S&P 500 index down 53%, but the average stock wasn't down anywhere near as much as 53%. So this is what's happening now, is you're going to have a similar situation once, the Mag 7 bubble bursts. I don't think it's bursting now, regardless of what NVIDIA is doing right now. But, if these Mag 7 stocks ever go down, 36 of the they make up like 36% of the S&P 500. So it's going to be a real drag on the index. Okay. So this chart here shows that the market has narrowed again in recent months, with only 28% of the stocks in the index outperforming. These are the same levels of concentration that we saw back in 2000 and back in 1973. In both periods eventually led to a long string of lean years for the index, but ample years for stock pickers. Well, hey, that's me. That's me. So that doesn't mean all Mag 7 are going to do bad, because I do think that, names like Tesla and whatnot will do all right. Kevin, yeah, I'll actually drop that. I'll drop that here into the chat. I've been doing that recently on Fridays, so you can have that latest stack there. So anyways, yeah, really interesting to see how this has been playing out. So concentration risk is definitely there. But remember, guys, we're only 3 years away from the last bear market. In many ways, you can argue that we had a bear market back in April as well. So I expect this sentiment to be even more bearish next week, and that could be setting us up for a floor in the market. We looked at this yesterday, but in case anyone wasn't around, I did want you to see this. So then I'm going to talk about Bitcoin in just a moment, but I do want to take a look at some individual stocks as well as get started on our garbage day formalities here. So let me see here. I got to make sure that I can get that the portfolio open and ready for you. Okay, there we are. All right, guys. So let's start taking a look at some of these Mag 7 names. You have NVIDIA dropping hard here, down about 4% today, going out near the lows. So let's see. We have yeah, you've erased the last 2 weeks worth of gains. The last 2 weeks worth of gains. Was this a false breakout? I mean, you have to start having that conversation. You have to start thinking about it. You are on support now. So unless you've been short semiconductors, unless you've been short NVIDIA, it's too late to short it now. It's too late to short it now. You take a look at Apple. Apple going sideways near the highs, barely budging. That looks fine to me. No need to make any adjustments there. Tesla, still got our stop loss here at 410.04. So this looks completely fine. No need to make any changes on Tesla. Let me just actually just formalize it just in case. So raise stops on Tesla to a close below 410.04. They had that event yesterday. I thought it was going to be a bit more I guess a bit more bullish, but it wasn't. So let's see if we, can get a rally back into the end of the day. The indices, we are near the lows of the day, and you could have a bounce. So actually just had Matt, you guys know Matt because he's been spending some time with you at the close. He just said, calling it now, we get a tweet about a shutdown being solved before the close and we rip higher. Yeah, maybe that is the catalyst. But there is a setup here for a potential bounce. That doesn't mean that we will bounce. In fact, this sell-off has actually gone a little bit lower than I would have expected. So yeah, I don't think that it's quite ready just yet. But the real weakness in the Mag 7 has been coming from Meta. Been saying to avoid this one. Don't really think there's much opportunity there. Amazon, you had that bull flag set up. This is just coming back down, retesting former resistance turn support. Completely normal price action, guys. Don't really know what else to say about that. Netflix has been weak. Looks like it wants more lows. So I wouldn't be rushing to buy anything on that. Google, which has been the strong one, also down 3% on the day, but not really showing signs of a serious trend reversal just yet. I mean, that might have been a blow off. Again, I think the rotation is going to be into names like Tesla, names like Apple, names like Amazon. Microsoft breaking down. Microsoft's got some issues, but you are on support here in Microsoft, right? Very clear support. Very clear support. So, no need to make any changes on that. Amazon, we can raise our stop loss up a little bit on Amazon. Let's raise it up to 230.3. Okay. So raise stops on Amazon to a close below 230.30. Okay, so I'll update that here. We have that Amazon trade here. 230.30. Okay. Let's look at some of the chip names. AMD is actually below its stop. So we're going to watch this going into the close. The stop that we have on AMD is 230.23. I'm not ruling out a little bit of a bounce before the closing bell here. So, if we can stay in this name, it's been really good for us. We're going to watch it going into the close. I don't want to, jump the gun here just because we're down, intraday. But the weekly chart, yeah, you've been giving it back some, but you're off the off that bounce. You take a look at MU. Okay, we came within a few cents of hitting our target yesterday. So I definitely want to raise this stop loss up some more. Let's go ahead and raise it up to as high as, we'll raise it up to 219.02. So 219.02. Okay. So raise stops on MU to a close below 219.02. Okay, so I'll update that here. Okay. And then Modi Manufacturing, that got stopped out. It looks like it's going to stop today, 145.23. 145.23. So we actually have a pretty tight stop on this one because our entry is at 151.50. Okay. So let's see. Yep, that one is all right for now. Okay. And I'm going to continue with garbage day here in a moment. We're going to be looking at some of the other stocks that we've been trading. I got to add some to the watch list. INDV. Oh, that one wasn't even on the position, so I'll have to add that because INDV, we did hit our target at 32. So I'm not sure why that. Oh, there it is. There, I missed it. So INDV, we hit that target at 32. Okay, and that was a couple days ago. So that was earlier this week on the 4th. So that gives 27% gain on that. Okay, so now we want to raise the target on INDV to a close below 29.13. Okay, and then the next target that we're going to have on this, you know what, I think we can just sell the rest of this at this point. We can always buy it back. Okay. Okay. So sell the rest of INDV if you own. Just lock in that one. So that trade is going to be closed. Okay, so good trade on that. And so that one is done. Okay. And okay, let's go ahead and take a look what's going on in crypto here, because you're actually seeing some strength, some relative strength here in crypto. You've not made a new low. That low from earlier this week is holding. And it's getting kind of interesting here because you did have that cyclical setup for a bottom. Bitcoin's been dropping now for a few weeks. A lot of people have been liquidated in that space. You do have Ethereum actually up on the day. Even Solana was showing some signs of life. Solana's up over 1%. Yes, we have that position in MSTR. And let's see, the stop on MSTR here is at 237, 237.95. So let's just watch this because, again, 237.95. You might come back. Actually, no, that stopped out yesterday. 236.99. So we stopped on that. So 237. Wait, 236.99. Is that what it was? 236.99. Yeah. So that one is out. You're out of that. Okay. MNMD. That one also stopped. It stopped at 11.53. So we had a very, very slight loss on that. Okay, and that was on the 5th. Okay, so that one's gone. And we're gonna watch that VSAT. VSAT, gotta look at this. Nothing to really do on this for now. Just down slightly on that. Okay. BBNX, yes, take a look at that. BBNX, we had that stop on BBNX at 25.30. So that actually stopped out yesterday. So BBNX was out. So because we closed at 25.04. Okay. So BBNX. So we had put that one on earlier this week. That was quick in and out. Okay, and the entry got in at 28 and then stopped yesterday at 25.04. Okay. So AMD and MU are fine for now. AMD's could stop out today. MU, we raised our stop up quite a bit. You know, the big thing is it's important to hold your winners as long as you can. That's how you're gonna get the big gains. That's how you're gonna get the big gains. So, yeah, there's some chop right now on the tape, but nothing's really changed in the big picture. Orca still looks fine. Again, healthcare, biotech and healthcare have been very strong throughout this. They're selling some today, but after the run they've had, that's pretty normal. So we'll keep an eye on that. Let's see. We didn't put out very many other trades since then. Cogent still has not triggered, and then NU that never triggered either. So now everything looks all squared away on that front. So okay, let's go ahead and take a look at some of the charts that I have here on Bitcoin. There's just a lot of evidence that we're getting close to a low here. We looked at supply loss, MVRV ratio. I don't really use that, but this was a nice compilation. This shows some of the oversold areas as before. So there's a lot of evidence building that Bitcoin is bottoming. Total whale holdings has actually been increasing over the last few months, or excuse me, over the last few weeks. So as prices have gone down, the whales have been buying. The whales have been buying. Okay, so I'm warming up on crypto a little bit here. So, again, in looking at what has transpired in Ethereum, for example, we've dropped almost 3 weeks or 3 months in Ethereum. You hit the high on the 18th of August, and we're going to have the 18th of November, not next week, but the week after. So Ethereum is hardly in a bubble, and it's actually holding up pretty good today. So we'll see if we can get a little bit of a bounce before the end of the day, not just in crypto, but in other markets as well. So let's go ahead and take a look at what's going on in precious metals. Gold and silver still seem to be consolidating their losses. I'd like to see one more flush to the downside before the bottom is complete. And what's interesting is how you're not seeing that much strength in precious metals, even though the dollar has been selling off over the last few days. So this is why I say, guys, like, don't become so fixated on the idea that these correlations that you observe between markets are going to hold forever, because they don't. They change. They change. Because you can have a situation where gold and the dollar and silver are moving in the same direction. If they're both rallying together, it just means that there's demand for dollars and there's demand for gold, but there's even more demand for gold. It's important to remember that. Really important to remember that. Okay. So that's what I'm seeing over there. Let's go ahead and take a look at what's going on in China. China is down today. Is it down more than the US? Yeah, a little bit more. But I'm gonna compare QQQ against the Qs. So CQQQ is down about 1.8. CQQQ is down more. So you actually have a rotation going on into the US right now. So we're getting a bit of relative strength from the US. Relative strength from the US. How about quantum? Quantum's been getting absolutely nailed. Yep, that correction continues. Some of these individual stocks, RGTI, wow. But you know what, guys? We've seen this before. We've seen this before, time and time again. We got to build out the new bases. We stepped this out. I've not been in these quantum names for weeks. Yeah. So it might not be until like the first quarter where these are viable trades again. Might not be until the first quarter where these are viable trades. QBTS, ARQQ, no matter where you look at it, you've pretty much seen 50% corrections across the board. So yeah, that's par for the course on these quantum names. And then you even look at some of the AI ones like Sound. Yeah, Mick made a lot of cabbage on those quantum stocks. Love to hear it. Sound, BBAI, these have been struggling. GRRR, yeah, those are all blowing up now. They're all blowing up. And then, of course, you have the nuclear names, which have been coming down pretty hard as well. ACLO, SMR, ACLO's dropped almost 50%. SMR's dropped over 50%. So a lot of times when you see these corrections happen, on these high flying stocks, the reason why you got to be in and out when your targets are hit, okay, is the corrections that follow are often in the 50 to 66% range. Like you usually see a loss of half of the move higher, a correction of 50%, correction of up to 66%, sometimes even more. But oh, look at that. Now Modine Manufacturing's back above its stop. So yeah, Les, I do think that's what's going to happen. I think right now you're seeing a big shakeout. The moves were completely silly, completely irrational. We capitalized on them. It was, one of our best trades of the year. And, we got out. We got out in time because our profits, our targets were hit and we stepped aside. And, what's crazy is I showed you that chart yesterday, how Bitcoin has actually done worse this year than treasuries. So, it just really comes down to like, do you think that we're going to finish the year like that? Or do you think we're going to see a bounce? Because I actually think that's where a lot of the opportunities are coming now. Kind of not so much in quantum, not so much in nuclear right now. I think there's more opportunities right now in crypto, right? Because we're down. We're down. So yeah, it looks like we are getting a little bit of a bounce here. Okay, AMD. Let's see this. Why I don't want to sell too soon. Tesla. It's getting a little bit of rally. So okay, let's see if we can get a bounce here. Are we going to get an announcement that the shutdown is over? Are we going to get an announcement that the shutdown is over? I don't know, guys. So let's see here. Okay, let me just make sure that we covered all the stocks and that this sheet here is all updated before I publish the announcements. I think that we are good. VVX, we got rid of that. That stopped out before. Yeah, that one is done. I'm just looking at some of the old stocks that we traded earlier this year. Yeah, wow, so many of these stocks, these AI related stocks just look actually terrible right now. So they're going to need some help. They're going to need some help at some point. I'm not saying from the government, right? Because there was that talk like, oh, we're looking for a bailout. I don't know how entirely true that was. Okay, so let me go ahead and publish this list for the updates. We've not been covering that many names. not that many names. So yeah, because again, there haven't been as many opportunities as there was in recent months, but now it looks like we are getting a little bit of a rally here. You still have Nasdaq underperforming on the day. We still got a lot of issues to sort out before we get the all clear, and especially coming off a week where you're seeing strength. I think last I checked, you actually had healthcare as the best performer on the week. Is this the only one that's up? Even XLP that just turned positive on the week. Let me see which one is up more on a percentage basis right now. So XLP is up around 0.47 right now. XLV is up more. So right now the leader on the week is still healthcare, and that's pretty consistent with what I've been looking at. Even IBB is now down on the week. So there's definitely some some defensive flows going on, but we know that we've been pushed to the brink, in the near term in many names. So we'll see if we can get a little bit of a bounce here going into the close and if it sticks. But I'd keep a close watch on crypto. Crypto's at the highs of the day now. So this is getting a little interesting because the crypto bottomed. If that was the warning sign, that sell-off that we saw in crypto, if that bottomed, then it's probably going to be a good sign for stocks. So in the meantime, I do want to take a look at the consumer staples sector with you for a few minutes here, just to see if there are any opportunity. We have a company, Turning Point Brands, what they're called. Actually doesn't look all that bad. Nice uptrend here. Okay. The thing is, when you're trading consumer staples, I mean, you're going for like 15 to 20% returns. It's not really the most exciting or the sexiest stocks to trade, but this is very clean. In fact, on this stock, I'd be looking for a move up to 120. So again, I just don't think that this is going into a bigger downturn right now. So, I'm just looking to see if there's any real big opportunities here. UNFI, United Foods. Yeah, this is a bit more interesting because you get back above 42. There's a good argument to be made that this is going to 80, which basically takes you back to its all-time high. So that's pretty noteworthy. Let's see. What else I got in this list? Vita Coco. Vita Coco. Okay, this is actually building a pretty good base. This is interesting. 42, 15 bucks higher. Okay, so 20 to 58 or so. So again, that's 38% return. That's not all that bad. Yeah, it doesn't look bad. I'm actually, I think we got. Problem is, like, I'd love to get in on a close like above 45. I'm gonna keep an eye on this one. Yeah, I like this. What's the weekly? I'm gonna set an alert here at 42.52. 42.52. Okay. Coherent, Ross, Mark, you want to look at it? Let's see. Coherent. Yeah, nice breakout there. Just coming back down. That was a big move yesterday. It really says a lot. Like there's been definitely been some big moves, right? Like in Datadog, I was watching this over in the Trinity that kind of left the station. So there's definitely been some big breakouts that have still been happening. So that's why I'm not really too concerned. I mean, yeah, it's been the longest drop that we've had since April, but it was kind of coming, right? You had that divergence here, okay? But let's just see where the end of the day takes us, guys. There's no real rush right now. It's a good chance the lows of the days are complete. You have Tesla still above its stop, AMD looking to come back above its stop. None of the Mag 7 names really threatening its stop. You do have Modine Manufacturing that's, actually well above its stop now. Nice rebound there. 145.23. So, yeah. We'll keep an eye on all of this. and I need to get ready to turn it over to Blake Young, who just jumped in. So, we started off today talking about how smarts alone are not good enough to cut it in this business. Volatility is the price that we pay to invest, and we finally got a little bit here. It's the longest decline that we've seen since the end of April. I bet you that a lot of the sentiment surveys are going to be looking real nasty next week as well. The labor market has some big problems, but the wave of liquidity, there's basically a tsunami of liquidity that we can see on the horizon. So it's time to prepare now. Earnings have been largely positive. Okay, the big risk now is the concentration risk that we have in the Mag 7 that make up a large proportion of the index, which could weigh on the indices once they eventually roll over. But the average stock might actually do all right. In fact, you're going to be getting an article this weekend from the Sector Bullseye newsletter where I talk about the opportunities in the Russell 2000, how that's not a bubble. We updated our stocks, booked gains, final gains on INDV here today, and tightened up our stops on some other names. So with that all being said, I'm going to turn this over to Mr. Blake Young. Blake, how's it going today?
It's good. Can't complain.
Yes.
I like movement. That's all I care about.
Yeah, I know you like movement. We've definitely had some over the last, week or so,
Yeah.
pretty much in one direction. So yeah, we'll see where the day finishes here. But yeah.
Yeah, for short-term trading, it's great. For longer term, I'm trying to decide if we're pushed enough to rotate into the next sector, but short term has actually been great. I like movement. Like I said, we just got
Yeah,
to get some movement.
it's pretty crazy because like the only sector that's really been presenting a lot of good opportunities that I've been taking lately have been healthcare, and that's not like the most
Yeah.
bullish sector, right? I mean, you have biotech, which can be high flying, and stocks. You've seen stocks rally with healthcare as the best performer like in the past too, but
Hmm.
it's usually not like one of robust economic growth, right?
Right. Yeah, and it is speculative, like I said, when it's being driven by the biotech.
Yeah,
There can be, or there should say there can be speculation when it's being
yeah,
driven by a biotech. So
yeah,
yeah, it's a little tricky, but like I said, there's nothing that's just screaming at me. This is our next rotation. So to me, it's you play defensive and you look for the short-term moves in the intraday and time it into the longer term. So, all
yeah. Cool. All right, Blake, I'll get out of your way.
right.
Have a good weekend.
Okay, thanks. Appreciate it. I need to have control though. So let me do like this.
Yeah, you're the host.
And thank you. All right. I should be sharing my screen. Thanks, Gianni. Have a fantastic weekend.